Hi everyone, today is the 12th of February 2023 and I'm going to be making my prediction for the upcoming week ending 17th of February 2023, and this is just going to be my regular long video explaining my view where SPX is going to be heading during the week with some levels to look out for when or if they're broken. Before starting this video, I would like to make a disclaimer that any and all information in this video is for educational purposes only, and it is highly advised to consult a financial advisor before taking a trade based on any information in this video, since all trades are subject to market risk. Now that we've made the disclaimer, let's move on into the video. I will be going over 3 charts as usual, the monthly, weekly, and daily in that order, and I'll be going over what signals each chart gives, and also I'll be covering the option chain for SPX, and then giving a final prediction as to where I think SPX is going to be heading. So let's start with the monthly charts. Now, the monthly charts provide us with a number of resistance zones specifically, since for the last 3 months, a resistance zone that has been failed to, the market has failed to break is 4094.69. And currently, February has still not broken it. So we can clearly decipher from this that the immediate resistance for the monthly chart is 4094 and the immediate resistance is 4002, which, as you can see, I have drawn a line here. Other than that, there are no clear candlestick patterns that can be taken from the monthly chart yet, since currently the month of February shows a bit of a doji candlestick. However, the month has not ended, so we still don't know where the market is going to be heading, as there could be a strong rally upwards or a strong decline downwards in the duration of the month. So let's now move into the weekly charts. Now, the weekly charts is where things get a lot more interesting, because as you can see here, there is a clear inside bar candle for the week, which is before this week and 2 weeks ago. Now, this clearly means that the next support and the next resistance are the high and low of the previous candle, specifically the mother candle. And the high of the mother candle coincides with the resistance point at 4199, and the low of the candle is at 4017. Now, this is an exceptionally long range. However, there are things that I'll cover in the daily chart as well, which will make it a bit more easier to actually take a trade. However, when these boundaries are broken, there is when a very strong push comes from the market, since, as you can see, there is a high probability that the market continues to stay within this range for a while, since it is an exceptionally large range. But when this range is broken, it shows clear sentiment in that direction, and it is very likely that the market continues to trend in that way for a while. The RSI does not show any trends. However, it does confirm this movement, since it has been going up, and because of the current movement downwards, the RSI has dipped downwards, which currently coincides with what I'm saying so far. However, it does not show any divergence as of now. Finally, let's move into the daily charts. Now, the daily charts provide a little bit of an insight into where the market is going to be heading, because, as you can see from last week, this point was broken, the FOMC statement got released, and then the market came all the way back down. Now, there were 2 strong black candles, and then there was a hollow candle, which ended off the week. Now, although there are no clear candlestick patterns, we can clearly gauge from this that the immediate resistance is at 4094 as mentioned, and the next resistance that we can make from this is a no trade zone from last week's prediction, specifically at 4120, and the next support point can be taken as the low of the mother candle at 4018, and the resistance and the support below that is at 4002. Now, the daily chart gives us 4 points to look out for. So let's recap over what the chart shows us. The monthly chart gave us a long-standing resistance line. The weekly chart showed us the inside bar candle and gave us short-term resistance and support lines to look out for. And the daily chart gave us 2 more based on the no trade zones and long-standing resistance lines from the chart. Additionally, before finishing the chart section of this video, the RSI also confirms this movement, since the market is going down, and then there was a slight rally in this last candle, as you can see, the dip of the RSI, and then a short rally upwards in this last stretch. Now, there is no divergence in the RSI, so there still can be no assumption made from the RSI other than the fact that it is currently confirming whatever I'm saying right now. So now that we've gone over the charts of SPX, let's take a look at the option chain, which I have here. For the monthly expiry, which is the 17th of February, the highest CE is at 4,100 and the highest PE is at 4,050, with no change in the CE or PE from last week's values, which give no clear indication. Rather, it gives an ambiguous signal, which I will get more about at the end of the video. The 4100 CE has a premium of 43.47, meanwhile the 4050 PE has a premium of 33.05, with a put-to-call ratio of 1.91. Next, we have the weekly expiry, which is also at the 17th of February. The highest CE is at 4100 and the highest PE is also at 4100, with a minus 100 change in the CE, which shows a bullish indicator as per CE for the weekly expiry, which can give a slight indicator as to where the market might be heading. And also, if we recap from the charts, there was a white candle at the end of the week, was showing that bulls started to gain some control. So this, in conjunction with the weekly option chain, can give a possible bullish indication. The premium for 4100 CE is 45.70, and the premium for 4100 PE is 55.70, and the put-to-call ratio for the weekly expiry is 2.94. Now, the daily expiry on the 13th of February 2023, the highest CE is 4125 and the highest PE is 4100, with a minus 25 change in CE and minus 50 change in the PE, which gives a bullish and bearish signal on both sides, leading to an ambiguous signal which can be completely discounted. For the 4125 CE, the premium is 5.30 and the 4100 PE is 24.01, with the put-to-call ratio of 2.36. Now, after going over the charts and the option chains for SPX for the week ending 17th February 2023, I can clearly define a no trade zone. And throughout this video, I have gone over several resistance and support points which are composing the no trade zone. And specifically, if we go back to the chart, the exact no trade zone I'm referring to is 4,094 and the low of the weekly candles, mother candle, at 4,017. And until and unless these are broken and closed over, it is highly unadvisable to take a trade, since there is a lot of market events that are happening this week that could sway the direction of the market anyways. And until there is clear sentiment on either side, it is highly unadvisable to take a trade. So this is my prediction for the week, and whichever direction the market breaks in is where I say my prediction is. So for example, if the market breaks above the resistance of the no trade zone, then my prediction alters to a bullish view. However, if it closes below the support, then my view alters to a bearish view. And on this note, I end the video, and I'll catch you in the next one, but this is all for my weekly prediction for SPX.